To kick things off, we're joined by Islay Robinson. He's the CEO at Enness, which specialises in high net worth mortgage advice all across Europe. We thought this would be an interesting topic due to the nature of his business and the environment we're in. So thanks for coming on.
Pleasure. Thanks for inviting me.
So Islay, the property market has gone full roller coaster in the last 12 months, given the current pandemic. What would you say has changed over the last 12 months or in the property market since COVID has sort of appeared in our lives?
Yeah, sure. I think we started our business when the global financial crisis in 2007. So we started and we saw a problem in the industry, in the market, in the economy as a whole, and everything fell away. Banks stopped lending, property prices collapsed, people lost their jobs and everything else. So when this happened, first of all, we didn't think it was going to be true. Then it started unfolding. And our first expectation was that all of the banks would withdraw from the market. They'd drop their loan to values. They would stop their appetite. They wouldn't lend into niches. And the property market would collapse and we'd be in a bad position. But this time that didn't happen. Government intervention was one thing. So that propped up the market. The banks didn't feel like they had to stop lending, and I don't really understand why that is. It's usually a natural thing. And then all of a sudden, people started buying houses because we thought we were finished. We thought the property market was going to be dead. We thought we had to lay off everyone and like move to the country and drive taxis or whatever. But the government fired up the marketplace, the stamp duty holiday, and then people started buying for security reasons. They started buying with gardens, with space outside the city, places where their children would feel safe. And then that's just built into this cycle of property transactions. And now property prices and everything are higher than they ever have been. So we feared the worst, but then the complete opposite happened. So in terms of what changed, lenders started lending more money, and it was phenomenal. And that's happened across Europe. And I think as soon as, so this is on a domestic scale, this is UK. As soon as international travel starts happening, we're going to see the Far East come to London, London people go to France, and this big movement of people internationally. And I think that's the change. I think we were all a bit paralysed before that.
So what's interesting, I think, for us to understand more from about you is that, given obviously that you're the type of people that you deal with come across, they're business owners, they're sort of high net worth or ultra high net worth people. And they probably would have had similar fears to you about, is this really happening? Oh God, this is really happening. Are we actually going to survive this? Yeah. What's going to happen to our business? So it'd be interesting to sort of hear from you as to how you kind of information was being fed to you from the individuals that you deal with and the sectors that they're in. And sort of, did that give you more confidence or more fear? And how did you sort of gauge as to what was happening in the wider economy, given all the different sectors and people that you deal with?
Okay, yeah. So I think that the first thing that individuals and business owners did, and we did as well, was we thought our cash flow is going to collapse during this process. So we need to shore up our cash position, but also our income. So we went to the lenders. So the bounce back loans and the CBIL loans and everything else came in. So I think business owners at the beginning shored up their shops, made sure that they were as well capitalised as they possibly could be to protect their business. So that was the first thing. But then some industries struggled. So half the hoteliers, half the restaurant owners, retail shops, they had a defensive protectionist movement. But then other industries like, online retailers, warehouses, property developers and so on, they became more aggressive through this period because there was more capital available. So there was winners and there was losers. And that information came to us quite quickly. As soon as people got over that initial shock, people decided what they were going to do. And there was real kind of confidence in decision making, which I haven't seen in this market for a long time.
Have you seen some special situations come into the market? I mean, we look at the London commercial property market, and we're in the middle of an office move at the moment. And it seems that there's almost a disconnect between the reality of there being a pandemic and the prices people are still trying to cling on to.
I agree.
In the resi market, prices seem to be a one-way trade and going upwards. But is there a risk that changes over time?
I think there's a one-way trend in real estate, in residential property, to a particular part of the market, and that is houses with gardens. That's what people are buying, or apartments with roof terraces. That's the residential market. Anything which is 20 stories high, underground, shared access, that's not as desirable. So there's a two-speed in residential, and I guess the same is correct in commercial. You can't really finance a hotel at the moment. So if you want to buy a hotel, it's in cash. If you want to refinance a hotel, you need to stack lots of security, and you're going to be borrowing at quite a modest loan to value. So an example is a well-run hotel chain, profitable, but they'd overspent. They hadn't even overspent, they'd invested heavily before the pandemic, which left them in a position where their balance sheet, their profit and loss didn't look as well as it could, so they couldn't borrow any money with CBILS, even though it was a fantastic business. So they couldn't borrow, whereas if you were buying an office block to turn it into houses or that type of thing, you're able to borrow quite easily. So special situations was really sector specific. But I agree what you mean. I agree with what you say. There is a real enthusiasm for some things, and the other things are struggling.
Right.
Yeah.
Sure. And you mentioned the travel, and at the moment things are domestic buyers buying domestic properties, and how that might change. Are you already starting to see the inquiry? This is a loaded question because I'm looking forward to a holiday.
Yes.
But are you already starting to see the inquiries coming and going from other parts of the world?
Yeah, we've seen a huge increase in inquiries for the south of France, for the Balearic Islands, for Dubai as well. So the places which are, if there was another pandemic, where would you want to be? So Dubai fared pretty well through this. They didn't suffer too bad. Government reaction to the pandemic was strong, and they got their vaccine rollout quite quick. So villas in Dubai are now performing incredibly well. The apartments aren't. So that's another example of that two-speed. France, Ibiza. So France is struggling, but the property type in the south of France for wealthy people is somewhere where you could stay for 6 months if there's another global nuclear fallout or whatever, and be quite safe there. So we're seeing interest for that. The Spanish islands, Ibiza, Mallorca, they fared quite well through this. They stayed on the green lists throughout. You can go there, you could go there and holiday during the pandemic. You could get there and get back. So demand for those places is lifting up as well. You can't really buy anything at the moment because the property markets are subdued. But I think as soon as that ability to travel and do that, I think there'll be a huge uplift in those marketplaces.